How's it going? Let's see. Let's just start going live and then we can maybe hop in and see how many of us are here. You should see a question there and a poll. So make sure you guys click on that. Let me just go ahead and put this on Twitter as well. So everyone from there can join in as well. It's not going to be a long live today. We're going to stick to a few things that I wrote down that we can talk about. Let me just get a pen and pencil. Okay, so the first thing that we talk about is this new tariff deal that has gone through between the EU and the US. So that is some form of a good news. You have seen Donald Trump. So he was meeting the EU chief, which is President von der Leyen in Scotland, and then that's where they made the deal happen. Now, I was expecting this deal to happen, and we spoke about it in the previous live as well, because we were expecting that it did look likely that eventually the US EU deal would go through, because 2 days after Trump deciding that he's going to have this EU meeting, it was pretty clear that that is now going to shift into the Chinese talks, which is happening on Monday and Tuesday, which is today and tomorrow. And Treasury Secretary Scott Bessent, as well as Howard Lutnick, Commerce Secretary, they're both in Sweden meeting their Chinese counterparts. So the Vice Premier of China is meeting both of these guys in order to basically either get two things done. One is either get the US China deal done, or figure out how can they extend it by another 30 days, 60 days, 90 days. The market is expecting 90 days of an extension, so let's see if that actually does happen. But at this moment, it looks like most likely there would be an extension. There wouldn't be a formal deal framework that happens, even though Donald Trump did say that it looks likely that a part of the deal is through and all of the other stuff that was going on. Anyways, so the officials, both of them have arrived in Stockholm for the trade talks, and it will be happening over today and tomorrow on the Chinese talks. But over the weekend, Donald Trump had traveled to Scotland, and in Scotland, he decided that, okay, I'm going to get and make sure that I think even the UK Prime Minister is going to be coming down to Scotland. So they're all going to be meeting there. And not only was the EU and the American trade deal done, but a few of the pointers that happened in that are pretty fascinating. So one of it is that, more importantly, the trade deal did get finalized and there was no escalation. So the good part of that is basically that if there's no escalation, what it actually means is that the market was worried about a 30%, 25% tariff rate that could come on the EU, because the EU was acting tough. And now that's pretty much certain that it is going to be an across the board of 15% tariff. So whatever happens is going to be a 15% tariff, and whatever the EU sells in America, they pay 15%. Whatever America sells in EU is going to be a zero tax and a zero tariff regimen. Now, keep in mind, this is not how it's actually playing out. There's a lot more involved in this. The EU spokespersons later also did come on, said all of this is for a certain items. It's not for all the items. So yes, there is an intent to get the trade deal done before the Chinese talks begin today. Because what this means is that when we spoke last on live, when the American-Japanese trade deal happened, we said this very clearly. The Japanese will be investing 550 billion US dollars into America, and they will be getting a payback of just 10% of the profits of that produce. Whatever that production is, it could be a factory to build cars, it could be a factory to, let's say, build corn, or it could be a factory for semiconductors. Nobody cares. It all is all dependent on Donald Trump. What happens there? Whatever the factory that gets built there, 90% of the profits are kept by the Americans, and 10% of it is going to be sent back to Japan. the Japanese, not the prime minister, but they've had their own issues there. But one of the spokespersons did come out today and say that that's not exactly the case. It's only 1 or 2% that would actually be an investment, and 98% would be a loan. Now, I'm pretty much calling bullshit on it because there is no way that they've had a trade deal in which they said, okay, 1 or 2% of it is going to be an investment, and the remaining percentage will now be an entire trade deal. So I don't really buy that as a story. I don't think that that's what's going to be happening here. Surely doesn't seem like that's going to be the case for me. Best Faith says, hi, how's it going, guys? And the other thing that happened with the Japan and US trade deal was the EU realized that this is a way to get Trump as well as the EU to come to the table and talk about what's happened. How do we fix these problems that we're in by following what the Japanese did? So, long story short, the Japanese got that investment stuff done into America, and that's why the Japanese stocks went up, right? Now, think of it this way: when Japan sells a car like a Toyota into America, they have a 15% tariff. When American companies like GM and Ford sell their products from Mexico to America, they have a 25% tariff. So that makes Japanese cars more competitive in American markets compared to American companies. So put two and two together, what that actually means is that the Japanese actually had a pretty good deal for themselves, and the Americans had a good deal because they're getting the investments from the Japanese for anything that they deem fit. The EU saw that. The EU realized that they, as a whole union together of countries, they're the second biggest economy in the world after America. So they bumped the $550 billion number up to about 880, 700 billion, $770 billion, somewhere around there, right? Out of which $750 billion would be purchases in US energy. And then they had another $600 billion in the US over the next 3 years in order to boost their exports. So remember what I'm saying. $750 billion in US energy is going to be bought by the European Union. That's the money that's going to come back. $600 billion in the US over the next 3 years is what their investment is going to be, right? Now, forgive me if I go off topic and answer a few questions or speak about something because Trump currently is speaking with the UK Prime Minister. If anything comes up, I'll actually tell you guys. All he says is that EU, US, and UK are very much involved in helping Gaza people and that he has some plans for Netanyahu. Anyways, so coming back to the EU US trade deal, what was exactly happening was $750 billion is what they would buy US energy, and another $600 billion in the US over the next 3 years would be to boost their US exports. So that's about a $1.3 trillion deal that Donald Trump got on his side for products that will be sold from America to Europe would now be going in at 0% from America. So what is this going to help is basically, so this is some form of a formal trade agreement, features a 15% tariff on European exports. American exports would come in at zero. You saw the European stocks go higher. Now, the reason why the European stocks started rallying was because there was heightened tension and earlier threats by Donald Trump that this would now be a 30 to 50% tariff. That would kill their economy completely, right? And I know pretty much that even Donald Trump knew that that's not going to happen. But somehow that worked out, and now it's a 15% tariff. So it seems like it's good, and they have averted a potential trade war, which was started a few months back, and now we're back to square one, right? Anyways, so most imports will face a 15% tariff, but strategic parts of these imports, which is like aircrafts, chemicals, all of these, they receive a zero tariff. So here's the other story. Meanwhile, you would have a 50% tariff on steel and aluminum, and that would still remain. So it's funny to figure out as to how this is actually going to be working out for these people. But strategic stuff, like if you look at aircrafts and chemicals, these things that come into America would these things that come into the European Union from America would be zero, and whatever America sells into whatever Europe sells into America would now be going in pretty much zero tariffs. They would have to pay a 15% tariff on everything other than aircraft parts, chemicals, and semiconductors. So it would actually be fascinating to see how this works out, how the European Union has agreed to this, because I have started seeing of some form of dissent taking place. The French have actually come out and said that if they were negotiating, it would have been a better deal. Some of the other spokesperson have come and said that, hey, none of this is actually a deal. It's just a commitment from the EU that they would buy, right? It's nowhere written that they have to buy. So it's just a commitment, right? So there's no such way in which it is supposedly, I mean, they have a gun to their head that they need to be buying so much amount of produce. So that's not happening, right? Sean says might only go through by December. Yeah, possibly it could be. I mean, all of this could just keep happening because remember, I think this whole story is going to keep going on to a large extent because something that I was thinking over the weekend was also that the tariffs are not going to go off, right? 15% tariffs are now the 0% tariff. That's what, for the market, that's what it is. Now, whether that makes inflation go up, go lower, that's a separate story altogether. But at this moment, it's clear that 15% tariffs is a baseline. We don't have a 10% tariff situation, it's a 15% tariff situation, and it must remain because the tariff income will be used to balance the budget. The budget has already been shrinked from the tax side, not completely, but from the tax side, it has been shrinked because they've been giving tax cuts. Not only did they make the previous tax cuts permanent, but they've also reduced tax burden on current earners, salaried earners as well. Who's going to pay for that? So that's going to be paid through these tariffs. So you can't have these tariffs come in the morning and then in the evening out. So this is going to be there for sure. You're going to see a 10 to 15% tariff, bare minimum 10% maybe for some countries. But I think the only country left now is India, for which they have a trade deal that can go on. Rest everything is pretty much done and dusted because uh, I know the Chinese and the Americans are not going to agree to a 10% tariff. It's going to be a 15 or a 20% tariff because they cannot have the European Union as allies paying a 15% tariff, while the Chinese have to be paying a 10% tariff. It doesn't work that way. So the Chinese might be paying a 20-25, they'll just be brought down from there 50 and 35, whatever hell the numbers they like currently being at. That being said, one good thing that's happening in the market is that you are now seeing a lot of this tariff noise pretty much going away. A lot of this noise about tariffs is going to pretty much go away, other than the America China talks. That, my belief is, you're going to be seeing Scott Bessent and Howard Lutnick over the next 2 days saying they had great talks. They come back, they're going to say, okay, 90 days or 30 days or 60 days extension, and the deal would happen when Trump and Xi meet. Now, Xi has invited Trump to China. Whenever that happens, is when the deal will be signed. Listen, these are two of the biggest economies in the world. There is no way that they're going to be pretty much making a declaration saying we have a deal on Twitter, right? They both are going to be meeting and they both are going to be saying that, hey, we got this deal done and it's done. And that's going to be big pomp, but it's not going to happen now because Scott Bessent did come out and say that Trump's not going to be meeting President Xi before Labor Day. So that's out of question. None of that is happening at this moment. So I think you are going to be seeing an extension. Again, by the time we go live next time, which is tomorrow or day after, we will have clarity on this fact as to whether you are going to be seeing an extension. The market is believing that there will be an extension of 90 days. I don't know if it would be 90 days. I think it will be exactly the number of days between which Trump is going to be meeting Xi. If they're both meeting in 60 days, the extension would be 60 days. So my bet is that it is going to eventually end up to an extension. It's not going to become worse than what it already was or is. So that is pretty much done and dusted. The Japanese and the Americans have already signed the deal. The Europeans and the Americans have signed their deals. You have Mexico and Canada that need to do something in order to get their deals done. And then you have India and the US that need to decide on their deal. These are the only important economies that are of any significance in the trade war scenario. You already got the Indonesians and the Vietnamese having a deal, so that's also done. So you're left with these 2, 3 countries that are there, and the big ones that are left. They're going to get their deals done, and the market's going to be forgetting about the tariffs. The only thing the market will remember is that a 15% baseline tariff will remain. How does this affect us, people like you and me and the markets, right? As of today, it has not creeped into the inflation numbers, but do remember that eventually it will. Someday, these tariffs and these prices have to be paid by the supplier or the consumer. Someone has to bear the brunt. Who's going to be bearing the brunt? Time will tell. But more importantly, what I'm trying to say is that both of them put together, all these tariffs put together, will increase inflation numbers. This increase in inflation numbers will restrict the Fed from cutting interest rates. So, the next topic that we're talking about is the fact that the Fed is going to be meeting day after. They will be having their dot plot and all of that other stuff that they have, and they're going to come to a conclusion that they're holding steady. So, there is a question up there for you to answer. So, go ahead and answer that. People still believe they're going to be cutting 25 basis points from the poll that I have here, but my bet is that they're going to be holding steady. I am exceedingly doubtful that there is going to be any form of a cut. No chance of a 50 basis point cut happening. Because remember, even if they want to cut 50 or 25, it would look like Powell has given it to Trump. Do we need a 25 or a 50 basis point cut for Powell to show all of that? Is it going to help by any way a 25 basis point? I don't think so. But here's what I think he's going to do. He's going to come out in the July meeting. He's going to try getting all of his members to basically agree to the same story that he's selling, which is that let's hold steady now. And in Jackson Hole in September, let's do a jumbo cut of 50 if things go the way it is, because by then we'll know whether the tariffs have affected inflation or not. So that looks more likely to me as a scenario that could happen, wherein these guys could come in and be like, hey, you know what? The only way to figure this stuff out for us is to basically have all of these trade talks come to an end, see the effect on inflation, and then once we see the effect on inflation, let's do 50 basis point cuts instead of 25. So this is what I believe he's going to do. No cuts coming in the meeting day after. He's going to try getting all of his Fed governors on the same page. Again, I don't think that's going to be very easy because you have the Federal Reserve Governor Christopher Waller, who possibly could be the next Fed chair. He will want to dissent on the fact of not wanting a cut. I don't know how Powell's going to change his mind, but I don't think he's going to be able to. And then other Fed governor is Michelle Bowman. She has also said publicly that she is supportive and she's looking forward to a July rate cut. Both these guys want a July rate cut. The rest of the FOMC have clearly been of the concept that they're looking at holding steady or not cutting at least. So there's no hikes in question, that's for sure. But the question at this moment for all of them is the fact that it does look like you are going to be entering a scenario where you could have two dissents on the FOMC board. That makes Powell's job tougher because it starts looking like he's weaker. So he's going to be coming out in the speech, and I do believe that in that speech, he's clearly going to be letting us all know that, hey, the economy is good, everything's great. I will be cutting, but not today. We could be open for a jumbo cut or a supersized cut if required of 50 basis points if inflation stays steady up till Jackson Hole. A 50 basis point, now this is what I'm saying, which most people don't agree with, but be that as it may. A 50 basis point in September and telegraphing it today is better than cutting 25 today and 25 in September. Letting the market know and telegraphing in advance that you are open to a supersized cut gives the market certainty that they can look forward to a 50 basis point cut if you are ready to showcase tamer inflation. If inflation stays tame and you don't see it going higher, you give yourself the ability to say, hey, 2 months out, I can cut 50 basis points as well. All I want at this whole moment is to see how the inflation and the jobs number come out in the future up until Jackson Hole. Remember, there's only two things that the Fed is interested in. One, the unemployment rate and the jobs market. You need a steady unemployment rate and a good solid jobs market. Do we have that today? Yes. Is it weakening? Yes. Hence, do we need interest rate cuts? Yes. Are we going to be getting it today or tomorrow? I mean, on this week? No. And two is maintaining inflation at the levels that they currently are. The market has been expecting a 2% inflation, and we have been staying around that number. Unemployment rate was expected at 4.2 to tick up to 4.3, but it came in at 4.1. So those were all good changes that were there. Those actually worked out in our favor, and you saw the market rally. But the 10-year bond has not been going anywhere. It's been staying steady, and the mortgage rates have also been steady at about 6.7, 6.75. So what's the easiest way of dealing with Trump, as well as waiting to see if inflation actually spikes? If I was the Fed chair, and I'm not, but if I was, this is what I would say, is that I'm open to a supersized cut, or I'm open to a jumbo cut, and we're ready to act aggressively if needed. If inflation stays at near its 2% target, and the unemployment rate stays near its 4% at lowest levels in history for a very long time, and we see a solid jobs market of more than 100, 120, 150K jobs, right? Then that's the data that we're going to be getting this week as well. On Thursday, we're going to be getting the non-farm payroll number. Historically, we've had revisions which have made these numbers go lower, but at this moment, you haven't seen that happen. Hello, hello. And the non-farm payroll change that we're expecting is a plus 160K. So if you look at the numbers that are going to be coming out on Thursday, we're expecting, no, Friday, sorry. On Friday, we're expecting 108,000 for the non-farm employment change. We're expecting unemployment rate to tick up from 4.1 to 4.2. Remember the last time we expected 4.2 to go to 4.3, but it came in at 4.1. So it came in lower and the market rallied. This time again, we're expecting 4.1 to go to 4.2. It's very okay if it just goes to 4.2. It doesn't really need to go to 4.3, 4.4. That's the worry. And at the same time, if it goes lower or stays near its 4% number, it's a great number. What is more important to see is two things. Are we seeing higher non-farm employment? Are we seeing more jobs? Are we seeing more than 100K? Our previous number was 147. So that was a good number. The number before that was 139 and 177. This month's number we're expecting at 107 or 108. So give or take 110,000 jobs is what we're expecting. We don't want to see that number go lower, firstly. Secondly, we don't want to be seeing revisions. We don't want to see a scenario where previous month's numbers have been ticking down. Now, if that starts happening where we start seeing revisions saying, oh, the number previously was 150K, but after doing accounting and figuring out everything, now it's at 100K. That means that was just 50,000 jobs that was said were created but were actually not there. That starts taking a bigger hit. When you start realizing that that's actually there, and to a certain extent, it is happening. In the past 3 to 4 months, we have seen over 90,000 to 100,000 jobs that have been revised lower. By that I mean, when they were released, these numbers had cumulatively told us that, oh, there's 100,000 more jobs in the economy. But actually, a month later, when you see the revisions for the previous month, those jobs were actually not there. So that was actually 100,000 jobs lower. So that basically means that's 1 month of additional jobs that was just zero. So we have a job market in America that is weakening. People are not able to be increasing their pays. So the pace of hiring has reduced. You're not able to increase your salary. You're not able to increase your overtime pay. You are not able to take your job offer and go to another company and say, can I get paid more or can I get a better pay? That is not currently happening. So that is signs of a weakening job market. I am not saying that it is a sign of a job market that is turning into something where we need cuts today, but it is slowly weakening. Now, is this going to eventually lead to something where we can get way worse than what it is already? I'm not saying we could get into a recession, but the market does need some form of a push. At this moment, the administration is giving a push to a certain extent, but the Fed also needs to start cutting. I believe, again, a 50 basis point cut in September is a better idea than a 25 basis point cut today and a 25 basis point cut in September. Though, if there is no cut this time, you must be dovish in the statement, exceedingly dovish. Because if you are saying that you're data dependent and you have been following on data all throughout, then the data speaks for itself and warrants a cut. And just because you currently are awaiting inflation that could spike because of the tariffs, that is not a good enough reason for you not to cut. So you would need to telegraph in a way that we are going to be cutting, and it looks like we are likely there unless and until inflation picks up. Anyway, so we have non-farm payroll coming out at 100,000 jobs, 110,000 jobs. I'm going to be looking more for the revisions. I'm going to be looking more for seeing whether this number is staying steady above 100K. I'm looking to see what the unemployment rate is at. There's a lot of funny stuff that happens with this non-farm employment change is because a lot of people have stopped answering surveys. A lot of people that get these surveys don't really answer them, don't really send them back. It's just lying there. So there's a lot of disproportionate data that's being spread. So we don't really have great numbers to recognize if the economy is weakening, but we can see it through job openings, unemployment claims, and none of those are at worrisome levels that require the Fed to act. The only reason I'm still saying that the Fed must act and should act is because the housing sector in America is come to a standstill. Houses are not being sold, houses are not being bought. You have very low new home sales, you have very low construction activity. That's a lot of a hit that is currently being placed on the economy because you have a housing market that is pretty much frozen. Now think of it this way. If you can open up the housing market, if you can create construction, if you can create first time home buyers with a capital gains tax benefit, if you can create a market where people can be more involved in real estate, what happens then is you turbocharge the economy, which means from a 2% economy, you could now move towards a 3% economy. If the interest rates reduce, it adds to the ability for someone to take a mortgage. It adds to the ability for that same person to be buying another home. It also adds to the ability for more jobs to get created within the construction sector. Now, why am I talking about this? Is because the only way that the US can balance its budget is it must either turbocharge its growth rate and at the same time reduce the interest burden by having a lower interest rate. So these two things need to come together in order for them to actually do better. Now, is that currently happening? No. But can this be worked out if the Federal Reserve Chair Powell goes out and says, hey, you know what? I'm going to be cutting rates by 50 basis points in September. The mortgage rates will start adjusting beforehand. Remember, none of us or nobody takes a mortgage based on the federal funds rate. We take the mortgage based on the 30-year and the 10-year, or the 30-year especially, right? It's a flexible mortgage rate. So those are traded daily and they will adjust accordingly. If they start realizing that there is an interest rate cut coming in the future, the mortgage rates start dropping. If the mortgage rates start dropping, you start seeing housing activity pick up. Remember, that can add fuel to a bull market rally for the next 12 to 18 months. That is why I believe that we could be at a 7,000, 7,500 number on the S&P 500 in the next 12 to 18 months, which could very well end up in turning into a bubble type scenario, and eventually we could end up bursting pretty soon. I don't think that's a problem for today, but it is a problem that we are currently heating up as an economy, not just with the tariffs, but also with the rate cuts that could happen. So it'll be fun to see what actually happens here, whether we do enter into a bubble or we don't. But that'll be fun. I think a day before the non-farm payroll, we also get the ADP payroll data. So that's also going to be coming out. Remember, that number was significantly weak the previous month it came in at a negative number and the whole market was screaming. Again, a lot of these payroll numbers are survey numbers and hardly anybody's been answering surveys. So these numbers actually are very, very weird, right? Let me still just check what is the expectation for the ADP number. We're also going to be getting PCE that comes out this month end. That comes out on Thursday. So that's going to come in. We're expecting inflation to pick up from 0.2 to 0.3 and unemployment claims to stay steady. But the fact that we're expecting inflation to start picking up is what I want to see is not the fact that we're expecting inflation to pick up from a 0.2 to 0.3. My worry is 0.2 going to become 0.4 or 0.5? It's the velocity of change that matters, not just the amount. If the market is expecting a 0.1% change and it does come in that way, that's completely okay. The market doesn't care about that. The markets will rally because that's already been discounted. What happens is if this is a number that is higher, then that becomes an issue. How do you deal with that is the job of the Fed, right? Now, obviously, they're going to be meeting a day before we be getting all these numbers. They obviously do get the numbers beforehand, so they know what's going to be happening. But we're also getting the non-farm employment change coming in on Wednesday, which is the previous month was negative 33,000. We're expecting 82,000 positive this time. Now, I wouldn't be surprised if the 82,000 positive is either 125,000 positive or a 20,000 positive or a negative 20,000. ADP, I really think people should stop paying attention to it. It's not really that important. Don't really waste your time trying to figure out why one month is negative and why one month is positive. It doesn't really, you're not going to get out of it. And if you get an answer, the next month is going to be something completely different. So forget about it. So that's the news that's going to be coming out this week. Do we have anything more that's going to be coming out? Yeah. So on the 29th and 30th of July, the FOMC will meet. On the 30th of July, we will have the interest rate decision as well as the press conference. Currently, the policy expectation is that they would hold steady and it would be at the 4.25 to 4.5% range itself. I believe, again, the Fed is also, I mean, it's pretty much widely expected by everybody that they're just going to be holding steady. And from all the betting markets, it's also less than 95% probability that of no change. And the more important one would be the conference where he would come out and basically hopefully speak about a rate cut that is likely postponed up till September, right? Now, let's see what happens there. During the week, we also be get three massive Mag 7 companies and their earnings. That's going to be Microsoft, Meta, and Apple. Now, how these three do is going to basically decide how the Nasdaq and the S&P do going ahead, right? It is largely going to also tell us how the market is going to tell us pretty much how the advertising market is currently doing, especially Meta's earnings, right? That'll have a direct impact on Reddit or on Trade Desk and all the other stocks that we own. So Microsoft is anticipated to report cloud growth around 34 to 35% YOY growth, and that contributes to about 16% of their segment revenue. So let's see if the cloud growth has also been strong. It basically means companies are spending on cloud, companies are spending on advertising. These two things put together would showcase a scenario where markets could go higher because not just OpenAI news, but cloud spending from Microsoft. Meta is expected to have a $44 billion revenue, up 14% YOY. And let's see if some of that Reality Labs money is brought down. Now, remember, Meta has also been hiring a lot of people from OpenAI. So I believe he is going to be very bullish on AI in his speech. He is going to be on his earnings call talking about how great Meta's intelligence team will be, which for me might cause the stock to go up because when you hire people for 100, 200, 300 million dollars, you need to make the market realize why it is important to pay such big money for them. He also got the Scale AI team on board and he made Alexander Wang as the head of his AI team. So all of that put together, it does look like Meta at least would be very gung ho about the AI story. And that seems likely to me as something that could keep going on as a story when it comes to Meta. And eventually, I think the advertising market within Meta is also doing pretty well. My belief is from the data that we have had till now from Google, because of YouTube advertising revenue, which was expected to be growing only at 9, but YouTube's advertising revenue grew at 12 or 13. So that's way better than what the market was expecting. Google stock also had run up all the way from 160 to 190, and that came out. Now coming to the biggest behemoth in town, which is now the third largest company and not the largest company in the world, is Apple. What do they do is going to be the largest talk that currently happens during the week. They are expected to show earnings growth slowing to 17.7%, down from 18.1. Now, the larger question is not as to how much money Apple is going to be making or how much money they have and how much money are they going to continue making. It is what are they doing with AI? Are they going to fix Siri? Are they going to be fixing anything around AI? Are they going to get Anthropic into their model? Are they going to get OpenAI into their model? How are they going to solve those things is going to be of paramount importance. If they are able to come up and say that, okay, yes, this is how we are going to be solving AI, we have teamed up with Anthropic or we have teamed up with OpenAI for Siri, we're eventually going to can out our plans for Siri, and it's going to be all the LLM is going to be either Anthropic or OpenAI. The stock can pretty much start heading towards its previous high. If not for that, the market would start discounting Apple as not being a very good performer, because eventually at some stage Apple needs AI because they're the only ones that are lagging behind at this moment. And Siri's LLM has not been able to solve anybody's questions. So that is going to be kind of worrisome to see how this actually plays out for Apple. But in essence, that's what looks likely. Anyways, market should be opening in about 30 seconds right now. So yes, we got Apple, Meta, and Microsoft's earnings. So let's see how that turns around. Let's see how that plays out within this week. You got the FOMC meeting coming. You got the EU and the US trade deal is done and over with, but you got the China US talks happening in Stockholm right now. That's going to be happening today and tomorrow. Let's see what comes out of there. I'm not sure if we're going to get a trade deal, but I'm pretty sure that we're going to get some form of an extension. And I think everyone's already accepted that there is going to be some form of an extension. Okay, so that's that. You basically got the markets opening. The Nasdaq's up about 33. The Dow is flat to negative about 5 points. The S&P is up about 0.14%, so about 8 points, and the Russell is flat at this moment. So nothing really incredible going on at this moment. So that's that. Let's just go and see what's happening with Tesla, because Tesla, I do remember, had struck a deal with Samsung for a 16 billion semiconductor plant in Texas to build their fab. So let us see what's happening there. Do we have anything that's going on otherwise? The dollar index has picked up. I used to see it in the 96, 97 numbers. Now I'm seeing it in the 98.2 number. So slowly and steadily, we are going a bit higher on the dollar. Even though last week most of the currencies did appreciate against the dollar and the dollar depreciated, but at this moment it is looking like there is more amount of gas for the dollar to head higher. 44 up on the Nasdaq. The Dow is flat. The Russell's up about 8 points. The S&P is up about 10. I could still see the S&P go up another 100 points, maybe 1.52% more from here before we see some form of a pullback. Let's see, AMD is up another 2.5%. They did increase their chip. So their chip, which is their fight against Nvidia, the best chip that they have against Blackwell, they increased that by about 10,000 US dollars. So that's picked up. Let's see, Tesla is flat, so that's actually not done well. Samsung, on the other hand, in morning trade was up in South Korea, up about 5% on the news that they're going to be the ones who Tesla has selected. $16 billion fab. Anyways, guys, so let's take it one day at a time. Let's see what's going to happen. As of now, from what I see, we're 36 points up on the Nasdaq. So that's that. Anyways, thanks for tuning in. Make sure you guys subscribe, like, and go watch all the videos on YouTube or watch whatever you want to. Take care. Thank you.